Welcome everyone to our webinar on key updates on audit exemption and dividend tax in Malaysia. My name is Mandy. I'm the Company Secretary at PREMIA TNC Malaysia Sdn Bhd. It's my pleasure to be here with you today. For today's webinar, we would like to focus on two topics, which are dividend tax 2025 and new qualifying criteria for audit exemption. The Malaysian government has announced a significant adjustment in its tax policy by implementing dividend tax for the year 2025. This strategic move aims to refine the country's economic landscape by redistributing the responsibilities and improving tax equity among taxpayers. Malaysia will implement a 2% tax on dividends exceeding 100,000 ringgit received by individual shareholders. This initiative aims to target high-income earners to increase national revenue while minimizing the burden on the general population. The tax will apply to all individual shareholders, including residents, non-residents, and those who hold shares through nominees, by ensuring a wide and fair impact on those most affected. In this slide, let us go through the exemption from dividend tax and to which the dividend tax does not apply. For the year 2025, investors in Malaysia can calculate their chargeable dividend income using the following formula, which includes two steps for the calculation. The first step is the dividend income divided by the aggregate income, which includes salary, rental income, and others, and multiplied by the taxable income after tax relief. The result will be the chargeable dividend income. Second step, the chargeable dividend income multiplied with 2%, and we will get the dividend tax amount. This method proportionally adjusts the dividend income based on the taxable portion of your total income, determining the taxable dividend amount. As a result, individual investors and market participants will need to strategically adjust their financial and investment planning. Next, we move to the second topic of our webinar, new qualifying criteria for audit exemption. The new qualifying criteria for audit exemption are applicable for financial statements with annual periods commencing on or after 1st January 2025. The objective of audit exemption are to reduce the financial burden faced by micro or small companies, as well as the cost of preparing audited accounts. In line with the government policy to help companies in Malaysia reduce the overall cost of doing business. Respond to the report on the observance of standards and codes in Malaysia, Auditing and Accounting (ROSC), released by the World Bank in 2012. A private company qualifies for audit exemption if it fulfills any two of the following criteria. In order to support a smooth transition, the threshold criteria for audit exemption will be implemented via a phased approach over a period of 3 years. This approach will allow companies to adapt progressively to the requirements while ensuring that the qualifying criteria remain achievable for entities of varying size. The table presented is the implementation timeline and the corresponding threshold for each phase. The transition will be carried out in 3 phases starting from 2025. Companies which are dormant since the time of incorporation or dormant during the immediate past and current financial year will also be exempted from audit requirement. We hope that you have benefited from this webinar. Feel free to contact us if you have other questions. If you are interested in knowing more about this jurisdiction, please check out our future webinars. Thank you for your time. We hope to see you again in the next webinar. Goodbye.